Hello everyone, thank you so much for joining me today. My name is Solani Baloy and I will be talking about the differences between investments and saving. This came as a request after our talk on emergency funding, just for me to clarify just those differences. I think savings is making funds available for short and medium term goals. I think these are goals anything from 3 months up to 3 years. It could be for you to save up towards an emergency fund that you will deem is suitable and enough for your financial situation. It could also just be saving up for a holiday. Most of the time, savings vehicles are provided by our partners in transactional banking. So our banking institutions usually have these savings vehicles. You don't need a financial advisor when just wanting to save funds. It could be just a conversation with the banking consultant at the bank to show you the different vehicles that are out there and the different interest rates that you could earn potentially on those savings accounts. Now, this is not big amounts that we're talking about. These are not big amounts in terms of the return, because obviously these are conservative sort of savings accounts, only really exposed to one asset class, which is usually cash. So lower risk, lower return. Investments, on the other hand, investments are part of an advice process. For investment, you need to speak to a financial advisor who will establish the suitability of a particular investment after taking into account different factors, such as your risk profile, what kind of investor you are. So your risk profile, making sure that you won't jump out of the investment at the first sign of volatility, that kind of thing. Helping you avoid the mistake of buying high and selling low, jumping out of the market when the market is not doing well. So helping you avoid those kind of thing. Also looking at your investment goal, looking at your investment term, also introducing you to different asset classes, because with investment you're now being introduced to different asset classes. You now get exposure to the market as a whole, and there's a lot of risks that need to be explained, also a lot of opportunities that need to be explained. And a big concept that we get offered through investment is the concept of diversification. Access to funds that we would normally not have access to as a small investor, funds that are available in the retail sector, such as unit trust investments or portfolios that you have access to as part of your retirement funding. Big investors that have got capital outlay also have an opportunity to invest in different asset classes, but I think if you are at that level, you should definitely employ the services of a financial advisor. I hope you found this useful.